All right, there's John. Good morning, John and Stacy. I'm going to give you guys a quick intro, and then I'll let you take it away. You guys will be able to screen share and do a presentation if you so wish. So John and I actually met at the Allset Escrow launch party. He works with Erica McLean over at Allset quite often, and I guess she was talking about our team, and so John wanted to connect with us. I know that in the shifting market, you know, we got to do all that we can for our buyers, and so that's why we wanted to bring in John. He's going to be talking a little bit more about the loan assumption and buy down options, as well as some other unique options that Arbor Financial has. So thank you everyone for joining. John and Stacy, I'm going to let you guys take it from here.
Thank you so much. I appreciate it. One, I just want to say I'm really grateful to do this. I love to train, and I think this, this business is crazy difficult. And Stacy and I have been in it over 20 years, and we work with agents every day. You're our lifeblood, but it's a partnership. You guys know that. You got to have the right people. And so we just love any chance we can to provide you some information. So the real goal today is to help you grow your business, help you convert more clients, and do it in a way that's the least stressful possible and the most fun. Stacy and I love to have fun, because it can be tough. You guys know that. It can be tough out there. So we just want you to know that we do the same things that you do every day. We're super sensitive to it, and we want to help you make it easier. So that's kind of it. I'll let Stacy introduce herself as well.
Hi everyone, thank you for having us. My name is Stacy Hunjadi, and I work with Jon at Arbor Financial. I've been in the business over 30 years, and throughout my career manage offices with operations and sales. So we know the whole process from start to end, and we're really technicians at the loan process to make sure we can provide you certainty that transactions don't blow up. There's no reasons why, except maybe if something is wrong with the property, but from a borrower perspective, unless there's a sudden death or loss of job, there is no reason the transaction should blow up. Sometimes we know we have difficult borrowers where maybe they're not turning stuff in, but we partner you in to let you know if we're struggling with the clients. But that's kind of a little overview for me. John, do you want to share the screen for the presentation?
The sad thing is I'm trying to figure that out because I've never done it on this one. So hold on one second. There we go. Let's see if I can do that. Sorry guys, I should have it here.
Perfect.
No, that is just one piece. Sorry.
Do you want me to try and share mine?
Yeah. This is some of the additional documents I want to show them, but the PowerPoint, I'm not sure why it's not popping up.
Okay, and it's not letting me because you're sharing right now.
Okay, I'll get off. You want to do it?
Yeah. Okay. Okay, can you see that? I only see myself. Okay.
Yeah, you can just click through and then I'll go through it. That's awesome. You're going to start anyways.
Yeah. So as John said, he's been in 20 years and 30 years, so over 50 years combined. And, we have over 8,000 loan transactions that we've closed over our career. And basically, I'm going to go over the overview of the loan process and coordination, how we can provide that certainty, and really who we're working with. A lot of times we'll get phone calls and we're available, but if you guys want to make an offer and a client is right there and you're ready to make the offer now, but we know nothing about them, sometimes we can't give an answer in 5 minutes to give you a correct answer and provide that certainty so your offer doesn't fall through. John's going to go over top loans for the market, strategies to help your sellers and buyers, best offer package, the accountability and support we provide, and then how we can serve you. Okay, so here is just kind of a realistic of who we're all dealing with behind the scenes. And so you can see there's a lot of little bubbles. I'm not going to read them all to you, but people wonder why, you know, things might take longer, or it's like herding cats. We're waiting on different entities, different people, individuals to put our piece of the puzzle together. We have to, you know, work with the underwriters, escrow, title. We can't work directly with the appraisers, so we have to work with the appraisal management companies. So as you can see on here, you know, it's an organized chart, but trying to get all these parties and entities to work cohesively through the process. If one person delays, it can delay another part of the process. So what we do is we work efficiently up front to try and overcome any obstacles or hurdles that there might be. So the pre-approval process is really key and really important for you guys to have a solid offer for your clients. What happens is a lot of times we ask, you know, partner us in. If you're getting ready to make an offer, is your client pre-approved? And the difference between pre-approved and pre-qualified, you'll hear the names kind of interchanged, but pre-qualified means a client, we have not run their credit, we've only verbally obtained their information, which it's a start, but it really doesn't give certainty because a client comes from their perspective. They know what their take-home pay is per month, but that doesn't necessarily mean the underwriter is going to calculate it the same. Or maybe they don't claim all of their income on their tax return. So there's different variations. So a pre-qualification is a good starting point, but a pre-approval means we've collected their tax returns, all their asset documentation, we've ran and thoroughly reviewed their credit report, and we've gone through everything. We have pre-underwritten the file, so we know if there's any hurdles or roadblocks, what those are and how to overcome them. So if on a Saturday morning you have a client that's been, you know, talking about looking for a property for weeks and months, and we don't have any of their documentation and they're self-employed, it'll make it a little bit harder to provide you a guaranteed response. And that's what we prefer, so everybody can go through the process with ease and not have any headaches during that transaction. One of the things to touch on, sometimes contracts come in and the question is, can we get the appraisal scheduled today? And what happens, you know, since the mortgage meltdown is we can't work directly with appraisers and order direct. So we go through an appraisal management company and they put out the order to several appraisers. And then they come back and say, appraiser, you know, can do it by this date. And sometimes there's back and forth, but we can't always order with every lender until a client signs loan disclosures as well. So there is a process there that can be a little delayed. We do have ways to order the appraisal on our credit card up front, but it's a risk for us as well if a buyer decides to cancel and not go through. So it's a cohesive process that everybody has to participate in quickly, but we're here to do that heavy lifting to make sure and communicate with you any issues that we may be having with the borrower not responding quickly. John, do you want me to touch on anything else as far as?
No, I mean, I think that's good. The only thing I would say, a lot of consumers and even real estate agents, they've been surprised by a stat that I usually give people. Because we have 80 LOs, we're doing pre-approvals all the time, and some realtors want a pre-approval that's not a real pre-approval. They just want to write an offer or get their borrower excited. And what is not known is that 40% of pre-approvals never work. So basically, a buyer has a 40% chance of their loan not going through. That's an industry standard. So it's really sad that you could get a pre-approval letter and not have your loan closed. And I have agents all the time ask me, why did the lender give me a pre-approval? Why are they out shopping? And this is big banks. This is Rocket Mortgage. These are all these internet, everybody. I think it's more than that. When I was at my first company, it was a 45% pull through. 55% of pre-approvals were not really approved because most loan officers do not know how to calculate income. It's the number one reason. The other reason is that borrowers often don't give us the truth, and we find out things later in the process. So that's the only thing I wanted to elaborate on is, you know, that pre-approvals are important, but not all pre-approvals are the same. And I know you want to close as fast as possible, and we want to be able to, in my opinion, if you're really pre-approved, you don't even need a loan contingency. So how many lenders actually give out something with no loan contingency? Very few, right? But in theory, if you're really pre-approved, why do you have a loan contingency? So that's all I wanted to say. It's hard to get there. It's hard to do that with that much certainty. So we try to shorten it and offer maybe a 10-day loan contingency. But we do loans a lot with no loan contingency. But it's all about getting the buyer prepared. So we can talk about that later in more depth if that's of interest to you.
And
Stacy?
I want to add to
Yeah.
one point that you said, John, with that is we rescue deals a lot of times that didn't need to blow up at other lenders. One example, I had a client who was doing 5% down, and right before closing, it was a purchase in Oceana, and Oceana is a mixture of condos and PUDs. And the lender at the very end said, oh, you guys need to do more down because we can't do the loan without a full condo review. And I looked up the property and it was a PUD, and they had already canceled escrow. So the clients were skeptical and didn't want to move forward with me. They're like, how could he do it, but you couldn't? And I'm like, because I pay attention to the detail. It's very critical for us to ask questions, ask the right questions, and get the detail, which we do. And a lot of other lenders are hurry to the finish line, throw it in and hope it sticks. And so those are, you know, the reasons that transactions do blow up at other places, and they don't need to.
Thank you. Cool.
Mm-hmm. Do you want me to go to the next slide?
Yeah.
Okay.
So here's kind of, hopefully this is going to be really helpful. I asked Sari what might be of interest, and it was top loan products, how to help your buyers. We know the market's shifting, rates are going up. You know, last month I read from Redfin, 60% of transactions were canceled, escrows opened. It's the worst we've seen in over 10 years. And I had 3 buyers alone last month canceled just because of rates going up over a 3-day period. Rates went up 0.5% in 3 days. So yes, the market's shifting. We know prices are probably going to come down. You might even be seeing it. But right now we're in the transition. It's super difficult. And so with rates going up, we have to think creatively. Rates will go back down, but right now we got to get people in. And one of the biggest benefits out there for qualified borrowers is interest-only loans. And I gave you a quick example because there's a lot to cover. But at the end of the day, say on a top tier product, 30% down, you know, an interest-only loan can save a borrower $1,167 a month if they pay interest only versus the principal and interest. So for a lot of people, that's a significant payment reduction, and that's kind of a lifesaver. I just closed a condo in Carlsbad a month ago, and it was the difference for her. She just got divorced. She was really worried about her payments. We put her into an interest-only loan, and she's happy as a clam. It's $1 million condo, but you know, she got the ocean view, got the ability in the future to rent it. So it was a lifesaver from her. It actually was what made her be able to buy the home. So that's a great one. I'm sure you've all heard of them. The other quick thing is interest-only loans allow you to recast. And for people that have variable income or make a lot of money in multiple income streams, say you send in $50,000 to your current balance, I gave an example here. If you had a loan balance of 927, sent in 50,000, they're going to recalculate off the new balance and lower your monthly payment. So the payment would go down $198. So many borrowers like the cash flow management of interest only loans. And like I just helped a YouTube borrower, she makes 30,000 a month, but sometimes she makes 50 and she likes to send in the difference to her mortgage. And that keeps her payment going down as she throws money into it. Normal loans, like a 30-year fixed, most lenders, 99% of them don't allow that. So that's a great tool for your borrowers as well, especially the wealthy ones that have multiple streams of income. So I just wanted you to be aware of that. Let's move on.
And for interest only, to touch on that, the balance of the mortgage will never increase. So not to be mistaken with the loans of the past of the negative amortization.
So quick note, adjustable rate mortgages are on the rise right now because fixed rates are so high. I'm going to just tell you most of the adjustable rate mortgages that we know of, they're by Fannie Mae and Freddie Mac. They're kind of the typical products that the banks offer for loans in the county limits. Those rates are not really that good, to be honest, and I wouldn't even suggest them to my borrowers. But what's out there in the marketplace and what Arbor specializes in is lenders that are outside of Fannie Mae and Freddie Mac, the traditional bank loans. And we use portfolio products where the banks keep the product themselves, they don't sell them. They offer really aggressive pricing on adjustable rate mortgages. So in a case like that, we have a 7-year ARM, which is adjustable rate, but it's fixed for 7 years, hovering around 4.45%, where the 30-year fix is at 5.375. So it's a very, it's a significant reduction, almost $348 a month. It's going to help the borrower qualify for more when they're purchasing, and it reduces their payment. So the key is having the product depth in this market. Most lenders have just the traditional VA, FHA, Fannie, Freddie, and maybe one jumbo product. They don't have 100 lenders to go out and find the best product for the client. So that's why we're trying to say, what can we really do to help your clients? All right, keep going. Other unique, oh wait, did we miss one, Stacy? Oh, go to the next one down, products continued, sorry. Go one more down and then I'll go. Yeah. So right now, these are kind of the top products we're getting. A lot of agents, especially Orange County, are asking for these. Bridge loans. Buyers are wanting to buy and then sell their property. And we get tons of these questions. We have really great options, and I'll tell you really quick. One is the traditional bridge loan, where you're qualifying for a loan to buy the house, and you're cross-collateralizing the equity in your existing home. So basically, if they have a ton of equity in their current home, they basically use that equity to get a loan on the new home. Once they get that loan, close on the other property, they pay off the old one, and probably are going to refinance the new one. Super complex, we'll go through it, but that's an option that we have, and we have it without any income qualification if they have enough equity in the home. They're really expensive. I don't suggest them, but some people pay for the convenience. They want that. They're just not willing to try and gamble to sell and buy. We have a HELOC option too. If the borrowers have equity, you can get up to $500,000 on a home equity line of credit to help put money down on the purchase of the new home. If they qualify with the income, that's a better option. It's a lot less expensive, a lot easier. So that's a great product. And then we have something I haven't seen in my career, well, before the mortgage meltdown, let's say, is a no-doc program where the buyer can literally buy a primary residence with no income and no job on the application. All you need is 20% down and a 680 or higher credit with the reserves they require, and that's based on the credit score. So no income at all, no employment on the application. They just want credit, reserves, and down payment. So you can buy this house and keep your other house because there's no qualifying factor. It just helps you get in, and then you can sell your house and take over this loan and refinance it, typically 6 months to 9 months down the road. So hopefully that's something you haven't heard of that might be of interest. Very, very popular right now. And then the last one, I don't know if you've heard of it, every lender in the world is pitching this product because they need products to sell. So it's called DSCR, debt service coverage ratio, and they even have what's called no ratio. So what this is, it's for investors only. It's an investment property only scenario. It allows a buyer to buy a home without using any income, personal income. All you're using is the rent on the property you're buying. So say you have a rental agreement for $4,000 that you verify on the appraisal. As long as the mortgage payment is equal to that, you qualify. So all they need is down payment, credit score, and reserves, and that rent to cover the PITI. So that's really popular because a lot of real estate investors don't show their full income on their tax returns, but they have tons of cash. They might have 12 properties. They're making great money. They're just not showing it on their tax returns. Very, very popular right now. Real estate investors are buying up properties like crazy, and they don't care what the rate is. They just want the property. So if you haven't heard of it, if you don't know about it, reach out to us. We have products up to 85% loan to value. So you don't need a ton down. And then the final thing is we have no ratio. You don't even need the rent. You can just put 30% down, credit, and reserves. You can buy a property. It's investment property only. And I even have people buying $250,000 homes in Big Bear because they want to do Airbnb with them. So it's an awesome product if you have some cash and you actually, have a good, decent credit score. Stacy, go back to other unique products, one up. And then the final, there's so many products to cover, and I don't want to bore you, but I want you to hear about what's out in the market right now that's helping people buy and overcome some of these tough things happening in the market. We have a 1099 only program. So if you're like you or most realtors are 1099, we will take 80% of what your 1099 says versus looking at Schedule C. You might make 100 grand and write off 80 grand, and you only show 20 grand. The 1099 only program would give you 80,000 instead of the 20,000. If you're writing everything off, it's just going to give you, the lender's going to take 20% off the 1099. So that's a really cool product out there that's really helping people get into products. We have a verification of employment only loan. We literally reach out to the payroll and get a verification of employment of the income. It's good for like nail salons. People don't show their tips, but they make good money. We can do that product. We have P&L onlys for self-employed borrowers, meaning you just go to the CPA and get a P&L to show income. We have 1 year tax return for self-employed borrowers, which normally is 2. That's super popular right now. We have loans up to 55% when the government normally has a cap at 50. So that's a brand new product released last month that's helping people get in with the higher rates. We have non-wardable condo loans. So I don't know if you guys have seen these lately, but Fannie Mae and Freddie Mac changed the guidelines. And so these condo projects now have to have a more deep review of the association. They do an assessment of the reserves and future improvements coming. And so it's much harder to qualify for a condo now when you're using a government loan. So we have products that get around that questionnaire. That's what a non-warrantable condo is. It doesn't meet the lender's normal guidelines. That's really popular. We've saved many deals with these products. And we have commercial financing here, and we have hard money loans. We have construction financing for land and structure if they want to, build their dream home. If they buy the land and have plans for the build, we have lenders that do that. We've got all the down payment assistance programs you can think of, ones probably you never heard of. And then reverse for purchase, getting very hot right now. And I'll talk about an example of that in a minute. So we'll take a breath, stretch. I know we're probably boring you at the moment, but we'll load up the queue. Does anybody have any questions right now or anything they want me to elaborate on? I don't know if you're allowed to talk, actually.
Dang, no, I think I'm good. Thank you.
You're good? Okay.
Yeah.
Anybody have anything yet or anything that doesn't make sense? No? Okay.
Hey, I got a question. Can you hear me?
Sure.
Sorry, it took me a little while to get off mute.
Yeah.
On that interest only, how does that work? It's not for the life of the loan though, right? Like 30 years. How does it, when do you start?
That's a great question. So typically, I'd say on 95% of the lenders, the interest only goes as long as the fixed period of the loan. So if it's a 7-year ARM, 7 years interest only. Sometimes they'll all just default to 10 years, even if it's a 7-year fix. It's kind of dependent on the lender. So it's not a one size fits all, but it's going to cover the fixed period for sure.
Gotcha. Okay.
And usually it's 10 years, to be honest. Usually they'll just give you 10 years on it. Like even if you're going to go, you get a 5-year ARM and then 5-year fix, and then every year after that's adjustable, you're still going to get the interest only for 10 years. But we usually tell people, you're going to want to try to look at refinancing before that fixed period's up. And that's kind of, Fannie and Freddie say people only have their loans 4 years right now. That's the average. So a 30-year fix is not necessary, but people think it is.
Right. And obviously, or I guess not obviously, is there any prepayment penalty?
So in general, no, they're not allowed. They're on some of the, what we call non-qualified mortgage products, like the DSCR loans, you can put a prepay on them. But in general, you cannot have a prepay on any kind of, they call them qualified mortgage. So the answer is no. No prepay on these.
Okay, cool.
But great question.
Thank you.
One other thing I didn't talk about was there's a lot of these streamlined income document programs, which I covered. I guess I messed up my slide, sorry. But you all probably have heard of bank statement loads. And I just want to give an example of, we have over 80 lenders we work with. And it might seem excessive, but there are so many niches in this industry. It's really important to have this. So I got a client 3 months ago that was approved on a bank statement loan with her lender, and she was approved for 1.2 million. My agent said, I can't get her anything for 1.2 million that she wants. And plus, it's so competitive, there's 20 offers on that property. This was a couple of months ago. She said, will you just take a look at it? And I was able to get her approved based on 80% of her deposits, because I have lenders that give more credit than the default programs in the marketplace. So we got her approved for 1.7 million, and thus she found her perfect home, and there were only 5 offers at that price point versus 20 at the lower price point. So she was able to buy her dream home. She's 25 years old. She's a YouTuber, making 30 grand a month. And she had no idea what she qualified for, and she thought she got a lot less. So that was a great story. And it was really cool that I could go through, 20 plus lenders and find the niche where they gave more credit than what was out there. So not all these programs are the same. Hopefully that's the takeaway, that one lender or, a lender you're working with might have 1 or 2 of these products, but they don't have 10 to 20 that meet your client's needs. So product depth right now is critical, at least from what we're seeing.
And one of the things I want to add too, John and I had a lot of our career on the retail side, meaning, we could only sell what that company offered. And on the broker side, we changed to the broker side to be able to be competitive. And like John said, we have over 80 lenders, so we can shop rate and product to get the best of the best for our clients.
So this is the other thing. Sari wanted me to talk about these two concepts. I don't know if this is coming up, like you're hearing about these. So we just thought we'd talk about the top tier ones she asked me to review. And then I threw in reverse for purchase because I'm seeing that happen a lot. So first, 2-1 buy down. Has anybody heard of that? Just no? Okay. So what this is it's when a borrower who's buying a home has a start rate 2% below the rate that's going to end. So say rates are at 5.75 today, they're going to pay typically 2 points or even more to buy down the rate to 3.75. Okay, so that in theory helps them for the first 2 years with the lower payment. And sometimes it helps them qualify for that property, but it's usually just payment driven. So I'm not a fan of this product. It's the only time I recommend it is if the seller is going to give a credit to cover the buy down cost. And so while this is a strategy for a buyer, it's also a strategy for a seller. So if the home is sitting, that could be an incentive. And at minimum in the MLS, if you put it in there, you might get some calls. Seller willing to pay buy down option. Because rates are going to go down. So I think it's crazy to spend, sometimes 10, 20 grand to buy down the rate just to have a slightly lower payment in the beginning. And then you might be able to get that rate again in the future or close to it with no cost. So it's got to be a case by case scenario. But it could be a great marketing tool on the listing side just to get more interest. So just something to consider. We can go into more depth, privately if you want. It kind of gets complex, but just know that there's the ability to get a lower start rate if needed. And it is good for people that just came out of college and are starting a job and know their income's going to increase. They might want to max out their purchase up front, and then they know their income is going to increase to catch up with the payment increase. Assumable loans. We haven't talked about assumable loans in a long time, and all this means is, say a seller selling their house and they have a 2.25% rate. It could be of interest for the buyer to assume that loan. The problem is there's very few loans out there that are assumable. So, and the qualifying is just like any other loan. You have to qualify based on your income. All FHA loans are assumable. And then from there out, it's usually just adjustable rate mortgages that are portfolio loans, and it's case by case. So it's not a great strategy unless the seller or the person that has the loan reads the details of their loan terms. So I don't love advertising that, but if you really want to find out all the options for your sellers, you could say, hey, let's take a look, or call my lender and have them review your loan terms. Only if the rate's really low, I'd say maybe under 4%, then we could look at that and see if that's an option for them. Otherwise, I would say not the best strategy. Do you have any opinions on that, Stacy?
I agree, and they have to requalify as well. And for example, if the seller has been in the house for, let's say, 10 years, well, 10 years ago, they're not going to have a rate in the twos, but let's say they had a low rate, they still have to bridge the gap of the difference in loan amount as well. So there are some instances where it may work, but, we can definitely check it out, but they're far and few between.
Yeah. So the last is reverse for purchase. So recently I helped a brand new agent. He's decided he was going to farm and walk neighborhoods. He found a neighborhood that was aging, La Mesa. And he actually found 2 clients in 60 days just by knocking doors. And what he did was he asked me about a lot of these products that are out there, and he knew about reverse for purchase. So he found a lady, 90 years old. Her property actually was free and clear. and she was caring for a 62-year-old kid in her house. And she said, I do want to sell. My neighborhood's changing. People are moving in. There's construction. I want to move. I'm out. And he told her about a reverse for purchase. So she would, like, I'm going to use just this example, even though the age difference was different on this, but she had a fixed income. So she was like, I don't even know if I could qualify for a new home. And she said, I would probably just use all the proceeds and buy the next house. And we said, why not keep some of this money, invest it for your son who's disabled so he can have a future income stream. So we gave her the example. And so let's say this was the exact example and say she did have a loan. Sorry. Say it was $1.3 million, home. They owed 200 grand. The person was 70 years old, and the taxes right now, the old tax rate was still at 3,600. They could sell and net $1 million. They could buy an $800,000 home, and they would transfer their tax bases with the California, law that allows you to transfer your tax base. So those won't go up. And you could put down $440,000 of your 800. Oh, sorry, of the 1 million, sorry. And you'd never make a payment again. So basically that person could net $560,000, put it in the bank, invest it in an annuity that would create a cash income stream, whatever you want to do with it, buy another rental property out of state, whatever you want. But instead of giving up all your cash to buy a property, you can put down a percentage, never make a payment again, and have money in the bank. So it's a really good way to take care of your family by leveraging that equity you built in your home. So I don't know if there's questions on that. I probably started with the wrong scenario, but this was the one I created. Anybody have any questions on the reverse for purchase? Has anybody tried walking neighborhoods looking for aging out sellers?
No, I haven't, but that's interesting.
Yeah, it's really good that your title rep will usually know the neighborhoods that are best. I mean, really great title reps know that data.
Yeah.
And it's worth it. And you can look at their current value before you go knock doors, so you have an idea. You can usually look up the loan amount and know where they're sitting. And most people don't know they can transfer their property taxes. And that's a big, big factor that people get worried about. That's within California. It doesn't work out of state, but within California, if you're over 62, you can. So
awesome.
It's a really amazing strategy, and especially reverse with purchase can be life-changing for them. Let's see, strategy. Yeah. So best offer package. This is something that Arbor created. So our president developed this product, and let me see if I can share. Well, what it is it's literally just an all-in-one way to write an offer for your borrower. So what you do is you co-brand with us. We have one document, and we share a portal together to put all the documents together. You get your RPA together. I put together the pre-approval, or Stacy, bank statements, credit score, and the electronic underwriting. It all goes into one document. So when you submit your offer, the listing agent sees this one co-branded, cohesive, clear document that shows how qualified your borrower is. We have about 150 agents on the platform. We've only been using it for about 6 months. We're rolling it out nationwide. We charge people about $50 a month. If you work with us, it's a free service for you. And I'll tell you, I've won 2 offers just because of, obviously the borrowers were strong, but the agents really loved the way this worked and how simple it was to see the qualifications of the borrower. So I can send you, whoever wants it, I can send you a sample afterwards. I don't want to bomb you today, but if you're interested in it, no cost, super easy to use, takes about 5 to 7 minutes to set up. and we have someone that can walk you through it, that coaches you if you have any questions. Pretty much you just need a picture of you and your company logo, and you're up and running. Stacy, you have anything you want to throw in before we go into? No? Okay. So I think a big part of this whole industry, you guys know it, you need an accountability partner. You might have one already. You might have a coach. You might use Mike Ferry. Who knows? Who knows what it is? You might use Siri. I don't know how you guys do it, but you can't be successful without accountability and support. And Stacy and I are an option. My closest agents are friends, and we are accountability partners. You know, I know their goals, they know my goals, we connect and we talk about how we're going to get there. The other thing is we're really just good support systems for each other, because there are days when this job is really, really tough. You do everything the right way and your borrower or your client does not appreciate what you do. And we like to be that other side that's there for you because we know how it feels. So I think everybody needs that boost, that strength, I would say love, like that compassion. So I just want to make sure you know that's what I love about this. I love helping people achieve their goals. That's the most important thing to me. Getting paid is great. That's the icing on the cake. So we work in a team environment. Stacy and I have worked together, the two of us have worked together for 10 years. And what I love about Arbor is that we foster a community of collaboration. Our LOs, if we get a weird scenario, we just send it out to the whole team. And within minutes, we know how to solve a problem because we have 80+ loan officers. Everyone has minimum 10 years experience. It's like the best of the best. It's like working at Top Gun. You know, you're in flight training, flying against the best fighter pilots. It's amazing. So we try to get speed, certainty, and great solutions fast. And how this helps you, we work with some of the best agents in the country, probably including yourself. I'm sure you probably worked with someone at Arbor. We share strategies of what's working. You know, I have a mastermind today at 1 with my LOs, and we talk about what are your agents doing to generate business right now. And those loan products and those strategies are out there, are the best. They're great. We like to give you ideas on lead gen strategies, you know, tailored to what meets your needs. You know, there's a million ways to drum up business, but you might not want to knock doors, or you may not want to cold call. You might want to meet with a CPA. You might want to go to a chamber event. You know, you might want to host neighborhood parties. Everybody has something that drives them and makes them want to generate business in different ways. We're here to share all the ideas that are out there and see what might work for you. You know, I don't love to cold call, so I try to do other things. You know, I try to work with better referral sources. You know, there's so many ways. So we just want to let you know that's something that we're here to help you with, and we have lots of resources to do that. Let's see. Oh yeah, I mean, I get this question a lot. The other thing we do to support you, I think, I know Stacy and I, if I know you, I'll answer my phone till 10 o'clock at night. I mean, you know, new agents, maybe not. We don't have a long history, but my really good agents, I mean, sometimes we're texting at 11 night. You know, if it's an urgent thing or we really need each other, you get access, weekends, the whole deal. My clients the same way, but I do have limits if they're not reasonable. So, but I know Stacy and I are there for you. We understand how the business works. You need us, and you need us on weekends. You need flexibility. So I want you to know that both of us offer that. And we have other people to back us up if we're not around. So you'll never miss a beat if you know you decide to work with the Arbor team. And we work open houses. So I love to do that. I just worked 2 this weekend, and we're really good at referring clients to you. So, and we're really good at supporting you. So if you send us a client you don't know them that well, and we're doing a pre-approval. During that pre-approval process, we really talk you up. We really let the client know how great you are. And as we get more details about you, we can share more and explain your strengths to your borrower, so it reinforces why they should work with you. I've found that to be really valuable in building relationships. So just know that that's our approach. We're here to be your team member and to support you. Let's see. I mean, really, at this point, the only thing I would say is I could show you some data reports that we use also to help you. I'm not sure how much you guys have in terms of monthly data about what's happening in the market. I know CAR offers a lot of resources. On the lending side, we have a lot of resources as well. So if it's something you're interested in, I could show you, but they're pretty much year over year. It shows like median price change. I send that out to my clients often just so they understand what's happening in the market. And I don't know if you guys do, but if you're not using those strategies, I would say, let's talk about that and show you what data is available. I just had a client, I sent out an email to a list yesterday, and I got a call from one of my clients. His home value in Carlsbad has gone up 800,000 in 2 years. And he now is interested in selling. And so the agent that I work with that sold him that house, she just got a call from him saying he's looking to buy or sell and buy. So just for me, proactively for her sending out a market report, she's going to get a potential sell and buy transaction, and that'll be over $1 million each. So hopefully anybody you're working with is really partnering with you to build your business and grow your business outside of just closing the loan on time. You know, I think our minimum job is to close a loan on time. It's like, and get the best rate. That's like the absolute minimum any lender should do. We're trying to add way more value to you. And so again, that's why we're so grateful to be on the call, because everybody has some kind of relationship. And you don't have to just have one lender, you should have multiple, because not every lender can do everything. And not every lender supports you the way you need. If they are, awesome. Maybe we can just pick up any pieces that are falling between the cracks. The last one, the last slide was just, really honestly thanking you for your time. So if there's any questions, or Stacy, if you have anything you want to add.
No, I think you covered it, and it was a lot of information. So definitely if there's any questions or follow-up.
And I'm happy to send this if you want this as a reference. If there's any resources you want, let me know. Stacy and I both are available to answer questions. So it's a lot of data, and I know it gets a little dry. Hopefully you found some value in it. Yeah, again, open to questions. If not, we'll let you be.
Hi, it's me, Nancy. Yeah, I would love that presentation. I think that'd be great.
Okay, I will ask Ashley.
Yeah, it would be great if we could review it again.
Mm-hmm.
So I'll send it to Ashley so that she could, send it to you, and then you have our both of our contacts in the presentation. And
Absolutely.
If you want details on anything in there, we're happy to set up a follow-up call, whatever works for you. Again, we understand you have relationships, and if they're working great, awesome. Just know that there's a lot out there that you can explore as well. So, and we'd love an opportunity to help in any way we can.
I thank you so much.
Yeah, well, thank you
Fantastic.
all for listening to almost an hour of a lender talk. So we really appreciate it. I know it's not always the most exciting.
Good stuff, though. Thank
But
you, John.
it's
Thank you,
necessary to
Stacy.
learn, yeah.
Thanks, John. Thanks, Stacy.
All
Thank you,
right.
guys.
Thank you all
Thank
so
you, guys.
much.
Thank you.
Appreciate
Thanks.
your